Most of the time at the beginning of the week, they're gonna send you into the wrong direction. Don't fall for those traps, okay? And most of the time at the beginning of the day, they're still gonna do the same, send you into the wrong direction. And most of the time at the beginning of the session, they're gonna send you into the wrong direction, trap you, and move into the opposite direction. So to prevent that, this video is for you. Okay guys, it's your guy here, the Unknown Traders, and today I want to help those who are struggling with consistency. And this video is going to be highly beginner friendly. Okay, I want to help those who, say for instance, they come to their screens and they just wonder which direction the markets are gonna go. They feel confused, they don't even know. Sometimes you feel like you don't even know anything, even after spending much time practicing. You'll just like feel like, oh, where is this market even gonna go? Is it going up? Is it going down? And the moment you get into that mode, you're gonna follow candles. This is why at the beginning of each week, each day, each session, most of the time they're gonna send you into the wrong direction, because they know that people are following emotions. When they give you this pin and this engulfment, you're gonna execute your trade, just to find that after two candles you are trapped. They are going nowhere, and before you know it, you are on a negative. Okay, so what I usually do is I have a signal day. As you can see, this market is going down. I have an exponential moving average right here of 20, and what I do is I'm gonna draw this line. This is a trend line. I don't use trend lines because most of the time they're gonna use trend lines to trap you, but you must understand where the market is going. Okay, that's highly important, and this trend line will help you. It will actually help keep you away from counter trending. What is counter trending? When the market is going down, you feel like, oh, this market has been going down for a while, now it has to reverse. If your mind is like that, then mine was like that too. But guess what? It didn't work. I was losing until I had to have a solid plan and strict rules to follow. So let me show you what I'm talking about. This market is going down, so we're not just gonna decide to counter trend. Okay, if you have a strategy for trading a continuation, then you are good to go. But if you don't have that, you can't just come here and see this doji candle and this engulfing candle and then you decide, oh no, now the market is changing directions, because they're gonna play along. You see, they pull back and they give you this doji again and they engulf again, and you feel like, oh, now it's making a lower it made a lower high, meaning it's going up, just to find that you are wrong and your capital is going. So what you need is, you have to be sure that they are changing directions. How can you be sure? First thing first, you must identify trap traders. You see this, they are saying go down, go down, and on this day, for me, I've been doing this for a while, I can see that this day is setting up to be a trap. For me, this is my signal day, but I'm gonna use this day so that you can understand. This is gonna be our signal day. Let me just type this out. Okay, signal day. This is a signal day and it's gonna be green. Okay, and I'm just gonna increase the size a bit. Okay, make it 18. So you see, this is our signal day. It's green. Why is it green? As you can see here, this candle on an I'm on an hourly time frame, but if you were on a daily time frame, this candle was gonna be a pin. Why? It opened here, it went up, and then immediately it started going down and closed low. So this is a pin. Okay, it goes up and then it goes and closes low. It's a pin. Okay, and then this day is a red candle. Why? Because it's continuing. This is also a red candle, this is a red candle, this is also a red candle. It opened up or high and closed low, so this is a red candle. But look at what happens on a Thursday. It opens low and closes high. Okay, this is a green candle. So for this week, this is the first green candle we are having. This is a signal that they are now changing directions. Why? Because if you want to confirm that they are changing directions, you must identify trap traders. Let me show you something. because the role of the market is to show you something, trap and reverse. They are saying go down, go down. Okay, your indicators will be showing you now that this is a downtrend because they are lagging. By the time they show you a trend, it's a bit too late. They will usually show you a trend on day 3, and the moment you jump in, the market will be reversing. This is why I hate indicators. Okay, most indicators will just get you trapped. So if you are trading a lot of indicators, I will suggest start reducing the number of indicators you are using, because relying on indicators is a recipe to disaster. Okay, we trade prices because it is prices that we see, and it is prices that are accurate. Okay, prices are the only accurate things that we can trade. So you see here, go down, go down. Look at this day, go down, go down. Hey, we are going down. Before this candle became a, a pin here, it was a very big candle going down, which broke this structure. In other words, it got people trading downwards, because people, most people are using emotions. The moment they see this big candle going down, they say, oh, now we are entering. Okay, so remember, this candle didn't just become a pin, it was a bearish candle before it became a bullish candle. Okay, so you don't trade here, but this is a signal. This is a day that shows you that the direction is changing. So what we are looking for now is, okay, now they've given us a signal that the direction is changing. Now they have all these guys here going down trapped. What we are waiting for is, we are expecting them for at least to pull down before going up. And since this is a signal that they have changed direction, this, in other words, it means we are gonna see an uptrend. And for an uptrend to happen, they have to come and break this level. Okay, because this is the high, they'll have to come and break the high. Okay, so this is where market structure becomes important. So for us to have a good opportunity, we have to see them going down. So now what I'm gonna do, after signal day, I'm gonna go down to a lower time frame. I'm gonna go to a 15-minute time frame. Okay, this which is the day, this is our signal day. I've already marked it out. Now I'm waiting for them to go down. I don't care, either 25 pips, 50 pips, or 75 pips, because the market moves in 3 levels. If it's 75 pips, then it's 3 levels of 25. If it goes down 150 pips, then it's 3 levels of 50. So what I will be waiting for is, I want to see okay, this is 75. The moment they pass 75, I want to see, I will just put this okay, I will put this rectangle which is barely visible right here. You see, this is my strike zone. Okay, before they reach this level, I'm gonna put it at 25. Let's see, where is 25? Because if it's a strong trending market, it's gonna only correct 25 pips. Okay, now they've passed 25 pips. I'm expecting 50 pips. Okay, let's see. I'm expecting at least here 50 pips. But now, since it has gone down, I'll just put this at 75 up until it breaks to 100, and that's where I can take it a bit further. Okay, but now, since this one only fell about 90 pips or 98 pips, it's fine. Okay, let's just say it's 98 pips. Yes, so I will be looking at the behavior now, because all my thesis have been confirmed. So now I want to see the behavior, if it is indeed aligning with my thesis. So what I'm going to be doing now, I'm going to be pulling out a new chart, or actually it's not a new chart, it's the same chart, but I'm going to put some indicators now. And I don't use fancy indicators, guys, remember. I will show you what I'm going to use right now. Right now what I have is I just have, let me take it to 50 minutes. I have session times. Okay, and these are session times, and these are whole numbers. This, as you can see, it's 154.50. This is 50. This one is 15400. It's zeros. This is a level at which most banks will either react, either reverse or continue. Okay, this is the level that institutions love. Okay, Okay, because even for you, if you buy something at maybe 1 rand 20 cents, you're more likely to sell it at 2 rand. Why? Because that's a whole number. And I believe this will help even those who hold for too long. Say for instance, those who are trading crypto, sometimes you find that crypto is more like something, it's a dump and a pump. They pump it up, they pump it down. Okay, so when it goes up, say maybe you buy at 10 cent, when the moment it gets to 1 rand, you'll be like, oh, it's gonna be like bitcoin, I'm gonna hold and hold and hold. And you just find that it's gonna go maybe to 1 rand and then fall back and take quite a long time, a year or 2 years, at that level of maybe 10 cent again. So what happened is they pumped it up. It's when it comes to crypto, it's usually a matter of quantity. When it goes to 1 rand, if you have maybe 10,000 coins that you bought at 10 cent, then that's enough profit. Sell at 1 rand. Okay, uh that way you'll make a lot of profit. Don't overhold. Okay, don't overhold. Log profits. Okay, so now I'm at a lower time frame. This is my session time. I only execute trades on these times. Okay, let's see what happens. This is Asia, this is London, this is US. Okay, so I want to see what happens. Okay, so these are not fancy indicators. These are just telling me times. These are just telling me my whole numbers. There's no indicator telling me to buy or sell. Okay, so I'm just gonna go to a lower time frame. Okay, and a lower time frame, this is what I have. Now I can see clearly this market went down, okay, during Asia, and then during London. By the time we are going to London, we can see that this market has already changed directions. Okay, it was trading below this, EMA, and now it has changed directions. Now we'll be looking for our entry here. Okay, and this is the minimum target. But since we know that, let's see, this was Fridays are explosive, so we can hold. Okay, we can hold, but this just gives us a thesis, okay, that they must beat this level. So if you are using a very very big lot size, then even 25 pips should be enough for you. But you can just hold. I'll show you how to set your take profits in a minute. Okay, so what do we see now? The market has changed directions. Now we are looking for an entry opportunity. For me, I do not open anything outside of these boxes. Okay, because I want to be in the session time. That's when the market usually trends. I know that, as I told you, the beginning of the month, the beginning of the week, the beginning of the day, the beginning of the session, that is when they will be sending you into the wrong direction. This is the first session of the day. They send you to the wrong direction. The intended direction is up, but they send you down. Beginning of the session, they send you down. Okay, they send you down. Remember, these pins didn't start as a pin. They were bearish candles going down, showing everybody go down, go down. Same applied to this one, same applied to this one. Okay, so we want to see what is happening. So for me personally, I'll go to the 1 minute time frame, and now I'm on the 1 minute. I'm gonna remove this line because I just use it to see if the market has broken to the upside or what. And now we are sure that the market has broken to the upside, as I have already showed you. So now what I'm gonna do on a 1 minute time frame, I'm gonna be trading this 1 minute time frame using the 1 hour, the 15 minutes, and the 4 hour. Okay, I'll be taking everything into consideration, so pay close attention, more especially if you hate the 1 minute chart. Start paying close attention to what I'll be doing. Okay, I know most people don't want to trade the 1 minute time frame. It's fine, but you must understand how the 1 minute time frame works, because this one will allow you to have tight stop losses, hence maximize your risk reward ratio. Okay, let's just me zoom back. Just want to show you something. You see, I have the high of Asia and I have the low of Asia. This forms my consolidation. Look, I can still expand this consolidation to the previous day. It still aligns well. So this line, I'm not trading trend lines, but I can see that this line is solid. Okay, prices have been reacting on it, and something interesting, it's at a number. I told you these whole numbers are levels at which institutions are more likely to react. Okay, they're more likely to react. Look at how perfect this is. They came down and locked the low. This is locking the low. They locked the low at a number. If you look, this is where they've been bouncing on a whole number. This is where they've been bouncing on a whole number. These are prices, guys. This is price 154.500. This is the price right here, 154.500. You can see this is prices. So I'm not using a fancy indicator that is telling me anything. I'm just using whole numbers because that is where institutions are more likely to react. Okay, so I have this consolidation. Markets do three things: they break out, they pull back and trend, they break out, pull back and reverse, they break out, pull back and consolidate. So you must know that. Okay, so since our signal day is telling us this, that this market is going up, and our thesis have been confirmed because the market started trading down, and now we can see they've locked the low. What do I mean by locking the low? They moved away from the low. If you look, this is a shoulder, head and shoulder. Okay, they moved away from the low and then they came again. Let me show you something very interesting. This is where they broke structure. Okay, this is a high, this is a low, this is a high. Now this is the recent high. Okay, actually this is the recent high, but as you can see, now this market has broken and they came and tested this level. Okay, they broke out and retested this level. Markets do three things: they break out, reverse and trade. But I don't want to show you this right now. I want to go to a 1 minute time frame. Already I have my consolidations in places. Okay, so we will be paying attention to that. So what I'm going to do is, let me remove this line, because the only time I'll have this line is when the markets have traded. Okay, so let me try to remove this line. Okay, let me go to a bigger time frame, then try to remove this line. Well, great, I've removed it. I'm gonna go to a 1 minute time frame that people really don't like. Okay, so what I'm gonna do on this 1 minute time frame, I'm gonna start paying attention to time. Okay, I want to see a story. So what I'm gonna do, I'm coming at 8, but based on my broker, this broker is 1 hour ahead, so this is gonna be 9. That's what you'll see on the chart. When you come here, look down here, it's saying 9 o'clock, but it is 8 o'clock for me. Okay, so I'm gonna come here and look for 8 o'clock, which for me is 7 o'clock. This is the candle here that opened 7 o'clock, so I'm just gonna note this candle that opens 7 a.m. Let me just do it again. I want to see that candle again. Okay, I want to see that candle again. Okay, now I've identified the candle. It's here. This is where 8 a.m. opens. Okay, I'm just gonna make my line so small, so thin. Okay, this is where 7 a.m. opened. Remember, I'm on a 1 minute time frame, but I want to take into account the 1 hour. Okay, I want to see how the 1 hour is trading. So I'm gonna say 7 a.m. open. Okay, this is where 7 o'clock opened, and this, guys, is gonna be the most interesting 1 minute strategy that you have ever seen. Okay, this is where the 7 opened. I can put this price here, and then I'm gonna take into account the low of 7 o'clock. This is the low of 7 o'clock, and this is the high of 7 o'clock. Okay, so what I'll do, I'll just mark these levels. So basically what I did is this is the high. Okay, what I did is I just identified my 1 hour using my 1 minute chart. So now I know what is happening on a 1 hour time frame, and I also know, guys, what's happening on a 4 hour time frame, because if I come here an hour before this closes, gives me a 4 hour. So I know basically now that my 4 hour has been trading in between here, let me just show you. This is where my 4-hour has been trading. Okay, this is where my 4-hour has been trading. I can say bold to say that my 4-hour has been trading in between this line. And now what happened? 7 o'clock broke the high of the previous 4-hour, yet the low is still intact. Okay, but I'm not gonna take that into consideration right now. But on my mind, I know what the previous 4-hour did. Okay, now the high of the previous 4-hour is just broken. So now what I'm gonna do is I'm gonna find 8 o'clock open. This is the beginning of 8 o'clock, so I can say 8 o'clock open here. So basically I'm just gonna put 8 o'clock open right here. I'm just gonna take this and put it here, and then I can just write 8 o'clock. Okay, pay close attention to what I will be doing. Okay, I'm just gonna put 8 o'clock here. Okay guys, and then I'm gonna search for the low of 8 o'clock. Okay, remember, we won't have all these things happening, so I must follow up every hour as it takes place, and I'll only be able to put the high once 9 opens. So for us to do that, let's go and find 9 o'clock. Where does 9 o'clock open? Okay, this is 4 minutes, 3 minutes. This is where it opened. Okay, so basically 9 o'clock opened here. So 9 o'clock opened where? Here. This is my 9 o'clock. And remember, 9 o'clock to 9:30 is highly explosive. Okay guys, so this is 9 a.m. open. Okay, this is 9 a.m. open. I've just taken 9 into consideration. Okay, I've just taken 9 into consideration. Okay, I've taken 9 into consideration. This is how I will usually or normally do my things. Okay, but for now, what I know is, since the market is moving very strong, I have 2 options. Okay, I won't trade the first hour. I usually don't trade the first hour. Okay, so I just wait for the first hour to play out. Okay, because remember, I told you, you must give the markets time to play out. So now, because 9 is open, now I'll be able to identify the low of 8 o'clock. Okay, and the high that was made by 8 o'clock. So this will be the low, because now we have it in place. We have 9 o'clock. Okay, now we have the low and we have the high. So where is the high of 8 o'clock? This is the high, guys. This is the high of 8 o'clock. Okay, this is the high of 8 o'clock. Okay, and we'll just put it like this, and we can just stretch it to this point to understand a little bit of what happened. So now let's start reading the story that our chart has been communicating to us. 7 o'clock opened, it made a low and made a high. The low is intact. Okay, the high of 4-hour has just been slightly broken by 7 a.m., but the low is intact. So now the market is going up, which was seen as shown by the trend line. The market is going up. Okay, that's great. And now the lows are intact. Okay, the low of the previous 4 hours is intact. The low of 7 o'clock is intact as well. Okay, 8 o'clock puts a new low. Okay, and we just have a breakout from our big consolidation. Okay, so these are the small things we have to note. Okay, this is the breakout. Okay, so what are we waiting for? My strategy is all about consolidating, breaking out, pulling, or trading back to the low. Okay, trading back to the low. So now let's see what we're gonna do. The market has broken out, so now we're gonna call this break in structure. This is BIS, it's break in structure. And we know that our thesis tells us that market is going back to the high of the day, of the previous day. Okay, and this is the high of the previous day. Now the market has broken the high of the previous day. So kindly note, we haven't taken any trade yet. Okay, if you were trading the first hour, well, then you had an opportunity. Okay, because let me show you. You are gonna use the low back handle. What is a low back handle? A low back handle is the last bearish candle. Okay, it's the last candle that was going down. But for me personally, I don't have anything yet. Okay, this is this candle here, this white candle. It's the last candle that went down. Okay, and now what's happening? They are basically trading into it. Okay, or else we can use this candle over here. You see this black candle? We can use this candle over here. You see, they traded back into it, traded back into it, traded back into it, and then they eventually broke structure and came and bounced on this line, gave an engulfing candle. You could have placed your trade right after the engulfing candle because this shows you that the low is locked. But for me, I don't have anything so far. So they have broken. What am I waiting for? I'm waiting for them to push down using at least 3 pushes while the market is about 3. So now we have a story as I was trying to explain to you. 7 opened, it made a high and a low. Okay, so what was taken out? It made a high and a low. Okay, nothing was taken out except 7 a.m. open. The open was taken out. Okay, so now we have 8 o'clock. Immediately 8 o'clock opens, it does what? It runs down 7 a.m. open. Okay, and then it trades into the open, it trades into the open, and then it goes, it breaks structure. This is 8 o'clock. 8 o'clock puts a high. 9 o'clock opens, it gives us an engulf. And what does it do? Now we want to track every 15 minutes. From the second hour, we want to track every 15 minutes. Remember, I told you that we're gonna be using the 1 minute. However, we're gonna be trading the 1 minute, the 15 minute, the 1 hour, and the 4 hour through this 1 minute. So now 9 has opened. We're gonna take into account every 15 minutes until we find our entry if it is presented. So what am I gonna do? I'm gonna take 50. Let's go to the 15. This is 15. So where did 15 open? It opened down here. So I'm just gonna note that 15 minutes opened here. This is basically what? 9:15. So we are taking 9:15 into consideration. So we just come and say 9:15. Okay, 9:15. We want to see, remember, the only thing we are looking for now is what? It's, we are waiting for them to trade back into the break, lock this level, and then we can be sure. Okay, so this is 9:15. 9:15. So 9 o'clock opened, it went high and it came down and it came down again. Okay, so now we're gonna look for 9:30 because we are waiting for them to engulf at least this level to show that we are going out from this level. Okay, the moment they'll engulf and show us that now we are changing direction, because you must first give them time to work a level. Don't be emotional. Wait for them to show you that they are now leaving. Okay, because they can work this to a point where they break down. Okay, best setups is the ones that they will break down back inside into the pushes, 3 candles or 3 levels. However, now we want to see them engulfing this level, then we will be sure that they are going. Okay, so let's see, they're working this low, they're working this low, they're going up, but guys, they haven't engulfed anything. So now what we're gonna look for is, we want to see 9:30. Every 15 minutes should be taken into account right now. Okay, every 15 minutes, because remember, I don't trade the first hour. So this is 9:30. 9:30 opened here. So I'm just gonna put that into account, record that, put it into recording. I'm not satisfied with the way this line is. Still, I'm not satisfied, but I just don't want to make this video long. Okay, so this is 9 what? This is 9:30 open. So we just record this 30. This is 9:30 open. What did 9:30 do? 9:30, 9 o'clock opened, went high, came and worked this low, okay? And then 9:15 opened right here, okay? 9 opened, went high, and came back and went up high. That was it. 9:15 opened, it came and ran. Let me move this price so that you see the pin. 9:15 opened here, it immediately gave consolidation and went down and knocked everybody out who entered on 9 open. Okay, that's what 9:15 did. And then it traded back up and tried to pull back. Okay, good. What did 9:30 do? 9:30 opened right here, and this is what it did. It ran down everybody who was in profit from 9:15. Okay, so this one has the recent low. Now we're gonna go to 45, and remember the first candle of 45, okay, it's actually the last candle on the 15-minute chart, 2 o'clock. It's the last candle on the 15-minute chart of the hour. It's the last candle of the hour. An hour has 4 15-minute candles. The 45 one opens the last candle. Pay attention to that. Pay attention to the following to the beginning of the hour. Pay attention to the beginning of the 15-minute, because it's the first candle of the hour. Okay, the second one gives us the 30, which is also a very key level to look at. So now we're gonna go to 9:45. We want to see what's happening on each and every 15 minutes. Where is 9:45? 9:45. I told you on this chart it's gonna say it's actually 10, because it's an hour ahead. Okay, this black candle is 45. So where did 45 open? It opened, let's see, it opened, went and closed. We can say it opened here. This is 9:45. Guys, are we going somewhere here? Are we going somewhere here? This is 45. Okay, this is 45. When we look at 45, this is 45. I have the EMA, okay, to help me, but for this instance I can remove it, okay, because it shows us the direction and it also helps you to find your entry, but it's fine. Let's see what 45 did. 45 opened here, it went up, okay. So basically now we have the high put in by 9 a.m. The high of 9 a.m. has not been broken. However, the low has been broken. This one has the high. So this one has the low. 9:30 made a low. Okay, this is the recent low. Okay, the low that has not yet been broken. Now let's wait for 9:45. 9:45 opens. It makes a high. Okay, however, remember, our recent high that has not been broken is the one that was placed by 9:15, and this one placed by 9 o'clock is not yet broken. So now let's see what 9:45 does. It opens, it goes up, runs 9:30 out. This is amazing, guys. It runs 9:30 out and eventually comes and places the low. This is the low that runs everything out. And interestingly, let's wait. Okay, now we're gonna need 10 o'clock open. Okay, where is 10 o'clock open? I want to show you something. This is 10 o'clock open. Okay, this is the candle 10 o'clock open. Where did it open? It opened here. So now we know where 10 o'clock open is. Now we are paying attention to what's happening every 15 minutes, every hour, every 4 hour on a 1 minute chart. So now let's see. Now this is 10 a.m. open. This is what 10 a.m. open. This is fascinating. This is where 10 o'clock opens. 10 o'clock opens right here. What does it do? We have a recent low. Okay, remember, every 15 minutes was running the low, the low, the low. Now we have 10 o'clock is opened. What did it do? Remember, we are waiting for something that will show us that now they are ready to go. Okay, they have put the recent low and engulfed it, and engulf shows that they are immediately changing the direction. They're changing directions immediately. Okay, however, let's wait. Okay, 10 opens, it goes down but fails to break the low. It goes down but fails to break the low. Now let's wait for 10:15. 10:15. This is 10:15. Okay, so where does 10:15 open? What's this one? 10:15 opened here. Okay, because now they're just bouncing on the high of the day. We need to know the behavior. This is 10:15. Okay, 10:15 open. Okay, I'm just paying attention to the behavior of the market. Okay, because this will keep you from bad trades. Remember, now what do we have? We know we have a low that the recent 15-minute has failed to break. Let's see. 10 o'clock opens here, it goes down and fails, it goes up, it runs through the high of 45, good, but it doesn't run through the low. It comes down again and fails, and it gives us an engulf. Okay, at this point, guys, you have your first entry. Or you are showing this because it has already played out. No, not because it has already played out, but I'm trying to explain the logic and what happened throughout this trade up until the point where you found your entry. Now it's no longer playing under the EMA. Look, it was playing under the EMA. Now they've moved. They've engulfed the low, which shows they've switched away the zones. They've tried to trade in on the following 15 minutes, but they failed, hence resulted in many pins. Immediately, same 10, it engulfs. Let's look at what 10:15 does. Fascinating. 10:15 opens, it tries to go down, but fails again. This is a second 15-minute candle that fails. So now we have 30 minutes where they failed to take out the recent low, which is this one. This is our recent low that they are actually failing to take, and they've already engulfed this low. They've already engulfed this low. It's the recent low, guys. They've engulfed it. Okay, so I want my lines to be differentiable. Okay, I just want you to be able to differentiate them. Okay, so I'm gonna use this thick. It's fine. Okay, this is the recent low. This is the recent low ever since we started 9 o'clock. Okay, this is the recent low from 9 o'clock. In other words, this is the low of 9 o'clock. So let me take let me take away this line and just put low of 9 o'clock. This is, let me use what I've been using all along because I believe in consistency. I'm almost done, guys. Okay, give me 5 minutes, I'll be done. Okay, this is let me just take, this is the low of 9 o'clock. Okay, now we are sure that 9 has locked the low. Okay, the low, this low is locked. My spelling, guys, I don't think spelling is a big thing. Okay, as long as you understand what I'm saying. This is the low of 9 o'clock, and this is the high of 9 o'clock that we have. Okay, this is the 9 o'clock. We can't stretch it throughout right now, but we can just do this because okay, this is the high of 9 o'clock. So 9 gave us a low and a high. And one thing we know is the market is moving away from this is the high. Okay, in other words, let's see the story. The market broke down and started playing around, trapping on this level. They used the high and the low of the previous day as the resistance and the consolidations. So now they're just playing around. They're trapping everybody. There are many people who are using emotions to enter here. So there's a lot happening here. Okay, but you are out because you understand the 15-minute, the 1 hour, the 4 hour. Okay, we are trading that using a 1-minute chart. Okay, so let's see what happens. This is your first entry. Why? They locked the low, they traded back to it, and they failed. So have the first 15 minutes that fails from this hour, the second 15-minute fails, and we have changed the hours. Okay, so as you can see, the 7 o'clock consolidated, 8 o'clock breakthrough, 9 o'clock bought another consolidation. Okay, and then 10 o'clock move from that consolidation. Okay, so now we are just looking to see where they move away from all this nonsense. This is the first entry where they moved away from this nonsense, and you can just put your stops just below this line, or you can put them, it's all up to you, or you can put them just below the low of 9 a.m. because that's the low that's the last low we are not anticipating them to break. So you can just put it anywhere. Okay, but now we are convinced that the low is locked. So basically I want to have tight stops so that if they come and break this low, then they take me out because I am wrong. Okay, so now they are moving away from this. So you can enter here based on the low that is locked here, but since they are playing on this line, this dots, this previous day's high, you can come and enter on this candle, because let's see, what time did this candle take place? This candle happened on 11:18. So 15 minutes, tries to take it down but fails. It engulfs, gives an inside bar, and gives this big engulf. Now we are certain. We have a stop of 20 pips, guys. Now we are certain that they have moved away. Now we are certain that they've changed directions. Everybody down here is trapped. Again, I told you, identify trap volume. Everybody here is trapped. Okay, everybody here is trapped volume. You see, now you can enter here, you can put your stops here, you can also put your stops here, but preferably here, because here they can just come and retest. But now you know, guys, you have a good entry. And so usually you can just measure let's see, I use consolidations. Okay, this is the consolidation, they break through it. Let me just put some this line here, and let me put this line here. Okay, and I'm gonna do a consolidate. I'm gonna use a Fibonacci. This is what I have right now. This is my Fibonacci, and I can take at least 2 expansions of this level. So basically my entries here, and I have a take profit of 68 pips. You see, this is 2 expansions. Okay, if it was at the low of the day, I was gonna take 1 expansion. I was gonna take 3 expansions, but right now I'm just gonna take this one to the level of 2. This is 1 full expansion of this consolidation. So what I'm gonna do right now is I have my take profit there, and you have your stop losses, right here. So roughly this is a 1 2 3 trade where you have a stop of 20 pips and a take profit of how many? Of 68 pips. This is a very, very good lucrative trade. Okay, it's a very lucrative 69 pips, roughly 70 pips take profit, and roughly 20 pips stop loss. Okay, and as the trade starts going and start bouncing on this EMA, you can just move your stops to maybe here. Yes, after it bounced here, because it did come back and bounce. The moment it bounced, you could have just easily moved your stops from the low to at least this point. Okay, up, yeah, I think they should be enough right here, because you don't want them to pull down and take you out of the trade, because usually they will come back for those who trail their stops, because they know that there are people trailing their stops. And guys, this was so simple. This was so simple. This was so simple. Okay, you could have got another trade here, but I'm not gonna explain it because of the sake of time. So all in all, this is how I use a 1 minute chart to get my entries. Yes, somebody could have entered here, you could have taken 100 and something, 200 pips, but guys, we need something that is highly guaranteed, and this here was guaranteed. They've locked the low, we are certain about that, and now we know they're gonna move away from the low. So guys, I believe this helped you. So if it did, just hit the subscription button and comment. Okay, so thank you a lot. I appreciate your time. Bye.